Hi traders, I am Pratik Somani. Welcome to CAD Education. I am working here as a senior instructor. Today we are going to discuss a CAD technical awareness program. With the help of this workshop program, you will be able to get some knowledge regarding technical awareness which will be very helpful in making a trade in this volatile market. But before starting our workshop, I want you to go through certain things. First of all, imagine it's not free and you have paid a lot. We have not charges anything from you for this workshop, but still don't please don't bring that free feelings. If you have any problem or any query regarding this workshop, you are free to call me at any time about this and ask your query about this workshop. Now depend on yourself. Why? What are the intentions to give this type of a workshop? Because we want people to be independent. Today what happened, among 90% of the people working in the market is dependent on others, their brokers, their advisors, or their colleagues and friends working in BSc and NSC. But nobody knows when to take and how to take or how much to take. So and it is a funda of a business. If you don't have any knowledge regarding your business, then you should not do that particular business. And these same things apply in the stock market also. So with the help of his workshop, we want to make people independent so they can take their own decisions in this market. Believe in lifetime. Now our relations is not only limited to this workshop. If you have any query regarding this workshop, after 2 years, 2 months, then also you can contact us. So now what the agenda of our workshop? Which topics we are going to be discussed? First of all, what is a technical analysis? Second, technical magical tricks. Third, money management rules. And fourth, discipline. This all the topics are really very important for executing a profitable trade. Without the help of these four, we can't take a proper trade. If anyone topic lacks in your trade, then it won't be of any use. So all the things are very important, and this is the complete package. So one by one we will discuss all the topics. So starting with first topic, that is what is a technical analysis. Technical analysis is not only related to market or stock market. It is very day-to-day word. We are using the technical analysis in our day-to-day life also. Technical analysis is nothing but it is like just on we are having a past data, and by implementing a study on it, we are predicting the future or predicting the probability of our success. That is a technical analysis, and these things we are doing our in day-to-day routine life also. So this is the dictionary meaning. What is a technical analysis? Now what I interpret technical analysis is little bit different. For that thing, what I had done, I had separated the two words, that is technical plus analysis. Now what I mean by technical, or what technical, some in our day-to-day life also we used to say technical problem in our machine or in our computer or in our vehicle. So I can say technical is equal to mechanical, right? Now when I say mechanical, one more word come into my mind, that is a no emotions. Yes, technical is equal to no emotions, and analysis is equal to observation. So what I mean by technical analysis is equal to emotionless observation. Yes, because why I interpret this technical as in this way, because when I go through BSc, NSC, MCA, yeah, Dow Jones, they don't have any respect for anyone. Now if Mr. Manmohan Singh also want to execute trade once BSc or NSC close after 3:30, that is after 3:30, then he have no powers to execute the trade after that 3:30 time. So BSc have no respect for that person also. So in this way, this is a sign of a emotionless. It have no signs. Many times we used to say there are natural calamities in India or any terrorist activities. So government used to provide a relief packages to the victims of that calamities, but we had never come across to a situation where the government had compensated to the person who has done suicide due to the losses in the stock market, right? So this all certain things shows that it is an emotionless market. So now if you want to trade in this market, you have to be come up with some emotionless ideas and strategies, then only you will be able to earn in this market, right? So now we are go through what is a technical analysis. Some importance of technical analysis is what to buy, when to buy, entry at a right time and exit at a right time. The most important thing is in this market is to exit at a right time, because the people who had invested at the 6300 levels, that is in 2008, is not I can say foolish, because they were expecting that market will rise or went further to 7000 or 8000. But there is not their mistakes investing on that time on that particular highs, that is 6300. Why it becomes high, that 6300 is a high, that we comes to know when market again comes to 2800. Until and unless at that time also, now every person is expecting that market will go to 8000, 9000. So the problem is not that they invested at 6300. The problem is that they had not put a stop loss. So might be if they had put a stop loss of a little bit around 6100 or 6200, they wouldn't suffer this much loss. So exit is most important, and sometimes we are very happy that we exit in profit also. Sometimes we purchase a stock at 100 rupees and we exited at 105. So, and what happens after 2 to 3 days, the stocks do a rally of 130 rupees also, up to 130 rupees also. So at that level, one exit at a 105 is also not proper. So what I want to say, that exit should be a perfect exit, that means minimum loss and maximum profit. Now what to buy, when to buy, entry and exit at the right time. Now some benefits of a technical analysis: identify periods of a quick rise or a quick fall. You don't have to stuck your money in that sideways period also. Identify stocks that will rise or fall faster than the market, means you can predict the stocks which can outperform the market. Useful to identify demand and supply. This is the best thing, or this is the all the markets are follow this rule, that is demand and supply. So with the help of technical analysis, we used to create, or sorry, we used to identify demand point from where the demand will increase, so we can make a long position over here, and we will also identify the supply front from where we can know okay, supply will increase, so we can go take a short positions from there. So this certain things is about uses and benefits of a technical analysis. So our first topic is now completed. We are proceeding to our next topic, that is a care magical trick. Today we are going to discuss a hammer, that is a one type of a candlestick patterns. So before explaining that candlestick pattern, I want to introduce with you this candlestick chart. This candlestick chart that is in candle shape, so its name is candlestick chart. That is a there are two elements which created this chart, is that is shadow and body. Upper shadow indicate the high, lower shadow indicate the low, and the body indicates the close and open. If closing is greater than open, the body color will be a green color, and if the open is greater than closing, the body color will be a red color. So there are different type of candles, candlestick pattern used to happen in this stock market, and among them one is this hammer. Hammer, you can see the shape of a hammer in this pattern. The feature of this pattern is that its lower shadow is comparatively very long compared to its body. You can see here the shadow is very long, and body is very small compared to that shadow. So what it indicates, that market had come back from its low and close to its high. So there are two hammers, that is red and green, and but the color doesn't make any impact in both the scenarios, or in both the situation my decision will be the same. It is irrespective that it is in red color or green color. So what matters is the formation of a candle and not the color of a candle, right? So now practical application of a hammer. You don't have to follow each and every hammer. You need specific structure, and after that if hammer forms, then only you have to trade in that hammer. So you can see over here a structure. We need this pattern after smooth downfall to get the best result. So when the market is in panic zone or panic mode, and after that panic a hammer created at the bottom of your chart, then you have to follow that hammer only, right? So what you have to avoid a hammer in a sideways market, right? So I will give you an example regarding that. So I will take you to the charts. Now here you can see a hammer, right? At the bottom, this lower shadow is greater. You can see, you can't say this is a hammer because its lower shadow is comparatively very low, but you can see a hammer at this after a specific fall or a sharp fall, right? Now as soon as you found hammer today evening, no, you don't have to buy morning when markets open. Now we need a confirmation. So where we get a confirmation, so we need we when the candle, next candle, breaches the high of this candle, then only you have to go for buy. Otherwise you don't have to purchase this stock. Now here you can see in this candle it doesn't breaches the high of this candle, so you don't have to buy. So in this way you will require the confirmation. You don't have to buy or purchase a stock as soon as you see the hammer. You should have wait until and unless it breaches the high of this hammer. So this hammer is now not valid for us. So you can easily can get okay, how which hammer is useful to us. Now again we will search for new hammer. Now here you can see this is a hammer. Today with the help of this hammer I am going to explain you emotionless trading. Emotionless, that you don't have to require any person whether to enter in this trade or to exit it. You should have your own knowledge for this trade, right? Now you can see this is also a hammer. Now what happens now when on the next day, following day, if the it breaches the high of this candle, then only you have to purchase it. Now suppose the high of this candle is 2585.30. Now on the next day it breaches this high, so you have to purchase as soon as it breaches the 28585.30 level, right? So before initiating your trade, one more thing should be in your mind, that is your stop loss. So what is your stop loss? The low of the hammer will be your stop loss. Now you can see over here at when we initiate trade at the level of 2585.30, my stop loss will be 2252.75, right? So in this particular day your trade executed and you purchase at the level of 285.35 or 28586. Now in this, on this particular day, your stop loss doesn't hit. Your stop loss was 2252.75 and green candle's low was 2526.20. So your stop loss doesn't happen. So what now we have to do? We will revise our stop loss. We won't go for targets. We will just revising, that is we can say trailing stop loss. So now our stop loss will be revised to 2526.20, that is this green candle's low. So for the next session my stop loss will be 2526.20 and not 2252.75. Now in this particular candle also this candle doesn't breaks. So what again I have to revise stop loss. Now my new revised stop loss will be this candle's low. So you can get it. What I'm doing, you have to just revise your stop loss with the previous candle's low. Now your stop loss will be revising by 2631.90. So as soon as you revise stop loss by this point to 2631.90, you had book a profit of nearly about 45 odd points. You can see because you had created position at 2585.30 and you have put a stop loss of now 2631. So you can see we are locking our profit with the help of this strategy. Now again your stop loss had not broken, so you will revise your stop loss with this candle's low. Now with the help of this strategy, emotionless strategy, we had just revised the stop loss up to this level 2985. So because the candle is not breaking its previous low only, so you had just revised the stop loss. So I can say here that we had created position at 2586 and we had just revised the stop loss up to 2985. So we had booked a profit of 400 odd points. Now in this particular candle the previous low had been broke, so now you have to exit from your positions. So what we had done, book a profit of 400 odd points in this particular